Yeah, hi everybody. Uh, Supriya, somebody, can you confirm if I'm visible and audible?
It's, you're audible and visible, and your screen is also visible.
Great, great. Thanks. So we are almost 55 people on the call right now. Thanks to everybody for joining. I know it's a clumsy Saturday evening. Possibly may not be the best time for a few of us. Thanks, Anuj, for confirming. Uh, as a very proactive network, while we keep doing investments, I think one of our responsibilities is to enable people with the right education, specifically a lot of people who are on borderline, who want to understand more, but you end up getting more deals and more details, and you get confused. So this master classes are specifically for all those individuals who want to know beyond. As a theme, I have close to 20 odd slides to give a very overview of the ecosystem, which will take me close to 40 odd minutes, I assume. All of you are requested to put your questions in Q&A section. We'll be happy to take that one by one, unless I'm able to embed that within my presentation after this presentation. So 40 minutes from my side, close to 40 minutes, and then we'll take the questions and we can continue till we have any question left. We'll also continue having these master classes every month, possibly in different slots, Friday or Saturday or morning or evening, to enable more and more people on the ecosystem to learn about this asset. So yeah, that's a very brief, and thanks again for being here on a Saturday evening. I just go with the flow with the presentation and keep accumulating your questions. So this is me. I did my graduation from Nagpur University. I'm a BTech computer engineer. Did my MBA from IIT Delhi. Uh, 10 years later, 2014, I did my executive MBA from INSEAD. So that's on the education side. From a professional perspective, I have been with India Mart for 22 years. Joined in 99 when we were 50 lakh rupee revenue company. Left in 2021 when we were $3 billion IPO company. So it's a long journey. Uh, the last role I had was getting to almost 5,000 people, 200 offices. So from a real true success story of a startup getting IPO is what I have lived, and that's what I do currently as a co-founder of V-Founder Circle, as a partner in VC fund, and myself having done 65 plus investments. So we are very operator-driven VC model where we put a lot of our money at stake, and not just a investment banker where you take money and then you invest. So that's broadly about me. Anybody want to connect one-on-one? We can. I'll also share my numbers or coordinates. Happy to help even after this call if that works. The two important keyword I always discuss for any investment and also for startup is diversification and CAGR. While all of us say that we are doing this or we know this, obviously CAGR is told as early as fifth or sixth class when the teacher tells us about simple interest and compound interest. But I think the actual usage happens when the money is invested and you actually calculate your returns. When we talk of diversification, these are typical asset class that operates worldwide. A property which gives 5 to 8% CAGR returns. Within property, you invest residential or a commercial, you take a home, you take a shop, and so on. You invest in gold. Typical investment 25 years back, gold predominantly was because of cash economy. People used to purchase a lot of jewelry, lot of coins. Now it has moved also to sovereign gold bonds, mutual fund ETF. Last 30 years, predominantly gold has given a 8% CAGR return. Though last 4 years, it has given 18% also. But we are here for a long-term investment asset class. So we generally take a 25, 30-year horizon for any asset class. Even in property, and nothing personal to anybody, there are people who have really earned 30, 40%. All the numbers that I'm talking are general government numbers across last 25 years. So the benchmark is very average in that sense. The third asset class is fixed deposits that people do, or various small assets with respect to provident fund, FD, and so on and so forth. That's very prevalent. Then you invest in listed instruments. There's equity, which you call repurchase shares. There are mutual funds, and there are PMS, called the portfolio management system. Last 30 years, mutual fund have given 11% CAGR return. PMS have given 15% CAGR return. That's the world we live in. Uh, I'm again relating all this with the last slide, which says the two important keyword is diversification and then CAGR calculation. Because unless we calculate the returns we are getting, most of us end up not even beating the inflation and actually investing just by our whims and fancies. Uh, the last instrument and the last asset class that we have is unlisted, where you can invest in two types, either as an angel investor, and we'll talk more on that, or as a VC, in the VC fund as a LP, you call it a, limited liability partner. So these are five assets. To connect the dots, if I tell my story and coming from India Mart, having a fairly decent exit, I invest a lot in managing my assets because at the end of the day, returns across 5, 10 years are very important. My thesis says 65% listed instrument. That's what I do. And this is purely personal discussion. Sorry, nothing against or in favor of anybody, but that's what I do. 65% is listed. Most of them in mutual fund and PMS. I personally never do equity directly. I don't know how to do equity, so I don't do. My 15% investment is in property, 10% in gold, and despite being in the startup ecosystem, my 10% is in unlisted instrument. It is not that I have sold my house and purchased all startups and VC fund just because I run a company. So very structured manner that I calculate, operate. And that's what I suggest to everybody, that you need to have an anchor investment asset class, possibly somebody, people like property, some people like mutual fund and so on and so forth. Some people even like gold for that matter, which is perfectly okay, but diversification is important. So a lot of people ask, why startup? I'm earning XYZ in certain asset or XYZ in certain investment. Why unlisted investment? And my only answer to begin with is diversification and possibly higher returns. When we talk of unlisted instruments, you invest in two formats. Either as an angel investor. When we say angel investment, typically you decide which startup to invest, you decide how much to invest. And a lot of people get into the assumption that we just need to invest 2 or 3 lakh rupees and that's okay and let's try. Please and very sincerely, please understand, any investment is a long term investment. Any asset class building is a long term horizon, minimum 5 to 7 to 10 years. That's where you tend to earn money out of your investment. Even if you buy a property, you're not here to sell in 3 months, 6 months, and do something. Why I'm telling so? Mostly with India growth story in last 2 or 3 years, people are very habitual now of mutual fund and equity as a cash instrument. Purchase today, sold within 2 months because it is liquid. You have timely markets, you can sell. That's not how every investment happens. Definitely not the unlisted one. While I compare unlisted to listed, please compare unlisted to a property investment. It needs 5 years of horizon. You cannot sell as of tomorrow. Even if it has multiplied 2x, 3x, it takes its own time. So coming back here, I say you decide the startup, because as a platform, we and then the multiple platforms in India who keep presenting the startups, even WFC investing close to 50 to 60 companies in a year. But most of us need to figure out, I need to invest in 3 or 4 or 5 or 7, and that's important to decide. Second important item is the amount. I've seen a lot of people who are not very structured, who don't diversify in that sense. You invest 10 lakh in one startup, it busts. You invest 2 lakh in another startup, it multiplies 5x or 7x. But end of the day, you earn zero. So very important to decide the amount you want to invest. And I keep saying diversify equally. Create your portfolio. And as mentioned in the third step, my horizon for any potential investor is at least 15 to 20 investments. 3 to 4 years, there's no rush to do a lot of investment in a single year, obviously, unless you have enough money to divert into this asset class. Keep investing small ticket size, 3 to 5 lakh rupees. So I've taken an average of 4 lakh. So you need 75, 80 lakh across 3 to 4 years to create an asset. And the return generally, as we look forward to, is typically 20-24% CAGR, which is 4x in 7 years. That's the horizon for most of us for this investment. So a lot of people debate 3 lakh लगाने 6 lakh लगाने हैं the amount are small. No. If you really want to invest, you really don't want to burn fingers, assume it as an asset class expanded over 3 to 4 years, do a very stringent filter that out of 10 that WFC or any platform has presented, I'll invest in these two, or as simple as SIP, 3 lakh per quarter, 1 lakh per month, and you keep working on that for investments. Uh, so I'm taking the question side by side. One of the participant is asking, can the number of startup and amounts be lesser? So yeah, there are no standard number, Anuj here. This is what I generally suggest to people. This 20 can be 15, which is okay. 3 to 4 lakh can be 2 lakh, which is okay. All that is okay. There's nothing right or wrong. My only question is diversification. When you say the other question you are asking is, can time horizon be more? I'm again saying this is not a formula written on stone. You are the best judge of your money. Just that the way you invest in mutual fund, let's say you say ki I invest in a mutual fund 50,000 rupee per month. My suggestion, simply start putting 50,000 per month in startup as well in a structured manner, which may mean that you invest only 2 lakh in 4 months, which is okay. Only three startup in a year, which is okay. That's okay. Keep doing that for 3, 4, 5, 6 years is my whole suggestion. There's no 0 1 answer that can come here. I hope I've been able to answer. I'll continue and keep taking more questions. But yes, no 0 1 answer. You can fine tune the amount, you can fine tune the money. Important thing is to keep doing it. And I compare it to SIP. You don't even remember when you started your mutual fund and when you will end. It is a continual process year after year for 10 years. And that's where highs and lows comes. That's where suddenly in COVID times, all the investment went down by 50%, but last 3 years, all the investment have jumped to 200% because it's a long-term horizon. So that's my only recommendation. Another investor is asking, do we need to be accredited investor as per SEBI norms? Bhumik, there's no definition of an accredited investor, by the way, for Indian investor. You need to have a definition of validation of angel investor. The definition generally says that you need to have a minimum asset overall of 2 crore rupees and which you self-declare. There's no IT returns required. There's no CA certificate required for Indian investor. So yes, there's no accredited investor definition at all by SEBI. It is pure validation of being an angel investor that SEBI asks, and which is again, as I mentioned, is a self-validation document. You really, as of today, don't need to submit any IT certificate or a CA certificate for that. Yeah, there are a lot of questions pouring in. Sorry, I'll just take in between, but I'll continue with the PPT and keep taking those answers. The second way to invest is VC fund. VC fund is like mutual fund, where there's a fund manager to whom you actually park the money. You don't apply your brain directly. Exactly the same it happens in mutual fund. The mutual fund or a VC fund invest based on their thesis. So for example, you see mutual fund, you say we are a large cap mutual fund, we are a small cap mutual fund, we are a mixed mutual fund, we are multi-asset allocation fund. Similarly, in VC fund, you will find there are funds which are as small as 20 crore fund, there are funds which are 500 crore fund, there are funds which invest in early stage, there are funds which invest in with Series A, there are sector focused fund, for example, climate tech fund, a prop tech fund. So there are multiple variation. But VC fund has a limitation. You cannot invest less than 1 crore rupee in VC fund, which the deployment happens in 3 to 4 years. So that's a similarity here. Somebody raised the hand. I will not be able to take the questions right now. Open-ended, you can write in Q&A. Any hand raised, will be able to take at the end. Yeah. Request to help us with the quorum. Another question somebody is asking, assume I invest 20 startups in 4 years, that is 5 startup, a platform like WFC showcase 50. Similarly, other process, is there a good way to select 5 per year? Sorry, there's no good or bad way. That's one of the challenges in angel investment. You are supplied with plethora and you need to decide. But please also understand the same is the problem with equity investment. There are 5,000 shares that are available on BSC. You select and you purchase equity out of that. So yeah, the problem with the startups, there rather than 5,000, they are 5 lakhs. Though all the platforms combined in a year, I doubt they invest in more than 5,000 startups. So comparative with 5,000 equity-based investments, opportunity of 5,000 startup-based, but yes, in Angel, you need to pick and choose. Just to add up here, there are a lot of people who simply define their own thesis. For example, I know people who say we only invest in companies who are 100 crore or more in terms of valuation. I know one of my friend who invests only in sports-based category. That I'm a fan of sports-based company, be it in terms of sport investment, be it in terms of sports technology, be it in terms of sports infrastructure. So that's another thesis. One of my other friends says that no, I'm a fan of only EV. So yes, those 5 startup per year have to be very, very depending on your thesis, and you need to define that you are the best judge of your money. Uh, One of the other investors is asking, though I have all these questions in next slide, but I'm just taking for to enable the platform. Any platform which allows small investment like SIP, like 50,000, as I just mentioned. So no, Bhumik, nobody allows that. In fact, SEBI is going to increase these amounts. SEBI doesn't want very detailed investments to happen. One of the platforms taking as small as 5,000 rupees. SEBI actually shut it down. There was a legal case against that and it was forced to shut down. They were actually doing क्या बोलते हैं उसे kitty party like investment. So yes, that is not allowed. When I say 50,000, I mean you can park 50,000 per month aside and you end up investing 2 lakh every 4 months. That's the way it will happen. You cannot invest 50K every month. No. Yeah, I'm getting a lot of question. I continue to move on side by side to enable this discussion. Yes. So angel investments typically there is a startup and there is an angel investor. You invest small amount as small as 2 to 3 lakh. Against that, you get either shares if you are able to invest directly in that startup, or you get NAV, same as you get a mutual fund if you invest via any angel fund. In India, there is a limitation for startup that he cannot have more than 200 investors on his cap table. And so most of the startups don't take investment directly in their on their cap table on the startup. Generally, it happens via fund, which invest.com or WFC and many other platforms provide. And that's where you get NAV. NAV of a startup in definition is exactly the same the way you get NAV in a mutual fund investments. That's our journey. That's what we have been doing. Started in October 20, almost 4 years in existence. We typically invest 50 lakh to 1.5 crore typical ticket size. One of the deal last month, we invested $1 million, almost 8 crore rupees also. A large community of 15,400 investors, 100 of them are there in this call right now. You are the people who help make us this community from 64 countries. Yeah, that's a sizable number that we boost off. So it's not just that India, Sri Lanka, Nepal, and people like here are investing. We have as far as US, as far as Iceland, as far as Australia, as far as Dubai, so on and so forth. And we have been able to do 150 unique startup investment, almost 180 total investment because there were multiple rounds and delivered 9 exit till date. So that's our broad report card all this while. We emerged as number one in 2022 with 71 investments. We emerged number one in 2023 with 103 investments. Uh, Number one is not important, just that how many opportunities we present in a year. Are we able to enable that many startups by fundraise? Are we able to create a better ecosystem for India as a country? I think that's what we boost off. Just these numbers, uh, if you set the benchmark, these numbers are really peanuts. India as a country need at least 50,000 startup to get funded, be it from government, be it from grant, be it from investors, be it from VC. Against 50,000, is a very small amount if I really benchmark those. Uh, if you see, India is a 3.5 trillion economy. Within US, there are 3 companies which are already 3 billion sorry, 3 trillion plus. Nvidia, Apple, and Microsoft, if I remember correctly. So yes, a long way to go for startup ecosystem, and we are just on the tip of that iceberg that we are able to invest ourselves. When we say community, we boast of 80% investors from tier 2, tier 3. That's our biggest strength. We keep traveling. So I myself, in July, traveled to whole of UP, 7 cities. I was in Lucknow, the next day Kanpur, then Agra, then Allahabad, and then Meerut, and then Ghaziabad, so on and so forth. We keep traveling because again the problem statement is education, exactly what the master classes we are doing here. We keep traveling and gather people in a room and enable the education for these purpose. And then 64 plus countries, we have 1500 plus investors, 300 plus cities, and we keep expanding the ecosystem. These are top few startups that we have invested till date. Zip, our first check from our own pocket as founder was as early as 20 crore rupees. The latest they have raised fund at almost 2200 crore rupees. So all of us need only that one success story in 2, 3 years, which gives a 100x multiply, and that's a real fascination of startup investments. Blue, we invested first round in 400 crore. They just say that 2000 crore. Hessa, we invested when they were doing 1 crore of annual revenue. Now they are doing 100 crore of a monthly GMV. That's the scale they have gained in 3 years. So yes, our knack to figure out the startups early, our knack to present the startups to you as a community early, our knack to find those success stories, that's what we do, and that's what we enable here. These are a few companies where we have been able to size those multiplier, YPay, and I don't mean when I say multiplier, these are exits, but these are multiplier with respect to when we invested and the latest round of valuation. YPay, we are at 25x, Zip, we are 8x, Styleworks, we are 7x, and so on and so forth. So within 4 years, where the average investment cycle for us is only 2 years, there are enough success story that we have been able to build across the timeline. Yeah, we have been on news for the right purpose, thankfully, and a lot of compliment both to investor side who have been getting engaged with us and the startup founder who see lots of value in getting along. So that's one piece of angel investor. Before I move to VC fund, let me take a few questions that are coming up. There are too many questions to be fair. Let me just try if I take a few right now. So somebody is asking investment in 10 stocks of equity. We can, sorry, I'm not able to figure the question out, but after a lot of study and research, we can still do 10 investments in equity, but same information is not available in this asset class. Yeah, Vivek, you're right. And specifically when you invest in very early stage, a lot of people assume that we as a platform has a lot of analytics. No, our 60% bet is on founder. 20% is on idea and last 20% is in the market fitment. Yes, I must say this is a risky asset class, high risk but high reward. If somebody wants to do research in this asset class, I recommend they invest at least in Series A companies. Why Series A? Because typically a company takes 3 to 4 years to reach there. They have their revenue, they have their investments, they have their numbers by that place. So that gives you some number to do analytics and research. So yes, if somebody wants to do that study, Series A and above is the right thing to do. In very early stage, a lot of details are not available. Other person asked how to decide if we need to invest in a cap table, any secret sauce. So Suresh, the secret sauce is to diversify. That's my only secret sauce. There's no other sauce, and that's the way I've earned in equity. That's the way I've earned in property, and that's the way I want to earn in startup. Uh, you can decide in investing in cap table, yes. Most of the companies take a minimum check size of, let's say, between 20 to 50 lakh to be in cap table. They don't allow ticket size of 3, 5 lakh in general, unless there is an exception. So for all the deals, at least that we present at We Found a Circle, we give both the option. If somebody wants to do small ticket investment, 2, 3, 5 lakh rupees, they have to come via angel fund. If they want to invest, let's say, upward of 20 to 50 lakh, which differs deal to deal, they can actually come directly on the cap table of the startup. Hope that answers. Is there any minimum or maximum amount prescribed under law? No, there's no law against that. But yes, SEBI is going to define. But if you ask today, there's no law, neither in minimum nor in maximum. But most of the platform, including We Founders Circle, we don't take less than 2 lakh rupees. One of the other reason is simply once, let's say, you earn the money, you want 50,000 to become 5 lakh, of 20, 2 lakh to become 20 lakh. That's an important question. You really need some money to come in hand. But if you ask legally, there's no prescription of any amount right now. Other question, how many VC funds are there? So I'm coming to VC. I'll just take that. Any link or URL where we can get more knowledge on startup. Anuj, sorry, the best piece can be you can have my number. I'll be happy to answer the question. But there are a lot of information on the web. Again, with more AI and all that, it is getting even more difficult to figure out what is right and wrong. Uh, there's no discrete information in that sense. Individual startup, yes, there are platform including invest where we can get, but not in general. Yeah, so moving on with the presentation, I just recap. We talk of multiple asset class. We talk of diversification across asset class. We talk of CAGR, which is a compound annual growth that should be the factor to invest. Let me tell a small story of myself, how you burn money. So my family business is property. My father is a property dealer. My brother is a property dealer, and there are a lot of cash business that used to happen. And I'm talking like 25 years back. Uh, when I got my first salary, the first thing I was told ki makan le lo. Okay, fair deal. Parents are property dealer. That's the only thing we have done in life. The only difference was they have been in the business and I was in a job, so I took a loan, I took a property, and so on and so forth. I remember one of the property I purchased in 2010, and I ended up selling it. I purchased for 50 lakh rupees and I sold it at 80 lakh rupees. And yes, family was very happy. We earned 30 lakh rupees and this and that. Very good. And me too was very happy. Uh, just that despite all the education, the brain doesn't work at the right time. You call it a brain fade. When I calculated few years down the lane, uh, that 30 lakh gain was actually 60%, 50 lakh and 80 lakh. That's such simple mathematics. I purchased the property in 2010 and sold it in 2020. So typically, annualized gain, simple interest is 6%, 60% divided by 10 years, as simple. When I do a compound calculation, it was 4.5%. And if I remove the all the stamp duty that I paid and the loan interest I paid, my actual CAGR was 2%. And that's when I challenged myself, why the heck I invested in such instrument which is only giving me 2%. I'm again saying this is my personal calculation and my personal experience. People may have different. I'm nobody to comment on anything. But most of us don't know how to calculate CAGR even when it comes to our investments. Uh, that's why I highlighted those two numbers, and that's why I keep saying, are our instruments and our assets giving enough CAGR to even beat inflation, which is typically 6.5% in India across multiple years? That's where these asset comes. You invest in startup is not important beyond this call, but you calculate your own investments, you calculate your own annualized CAGR. Most of the time, when I talk to people, they are very, very happy that a certain stock did well, a certain property did well, a certain mutual fund did well. Uh, Please understand that doesn't help anybody. What is your overall portfolio on a 31st March 23 versus 31st March 24 versus 31st March 25? That's a real CAGR value you are creating. A high or a low doesn't mean anything to anybody for that matter. Are we doing that? If we are doing that, are we doing enough diversification? These are the keywords I keep repeating. So we talked about asset class, we talked diversification and CAGR, and then we boil down to one asset called a startup. Within that, we talk angel investment, and we took a few questions. I'll take more further. The second way to invest in is a VC fund. Again, to create a comparison, angel investment is like equity investment, where you decide the company, you decide the amount, and then you invest. VC fund is like a mutual fund where you give money to a fund manager and the fund manager invests on your behalf. You don't have any active participation at all. He decides, and the only number you are looking forward is ROI. Similarly, VC fund, except there are a few differentiation that's what we are going to talk in next 3 or 4 slides. So since we are talking here for V Founder Circle and team, we came up with our VC fund called Avinya Ventures. We launched in last March, March 23 to be precise. It's a 250 crore plus 250 crore fund. VC funds have a duration of 7 years. And when I say close ended means a fund gets concluded at the end of 7 years by force. Uh, as compared to that, mutual funds are open ended. A mutual fund, you don't need mm, to conclude anytime. You can run mutual funds forever for that matter. But yes, VC funds are close ended. So our fund is 250 plus 250 crore, which means minimum is 250. We can expand it to further to 500 crore. Uh, our thesis is early stage, sector agnostic, uh, and India focused. This is an asset class where we look at returns of almost 25 to 40%. We typically come in 24%, which is across 7 years, it is 4x returns. Though, to be fair, it is not 4x ever because you give money at a certain uh, difference of time and then you get money at a certain difference of time. But just 24% CAGR, 25%, that's what we look at into this asset class. And SEBI has put regulation on three type of investments in PMS, which is an equity, you cannot invest less than 50 lakh, and that too investment has to happen at the day one. Angel investment, you cannot invest less than 25 lakh, which is across 5 years. In VC fund, the minimum is 1 crore, which you need to invest across 3 years in 4 tranches. So in our case, we take it in May 24, May 25, May 26, and May 27. That's how we take it. So yes, it is very spread across. The thesis that we have is to have five mega winners. When I say mega winners, is to have five startup who give 25x return and 25 startup which give 5x return. That's what we target. Uh, this is a very important slide from a VC fund understanding. So our thesis, if I split it in a simple manner, we are going to raise 500 crore. Uh, we are going to invest 100 crore in the, sorry, this number is wrong. This is not 10 100. So please note, this needs to be corrected. We are going to invest 100 crore in 100 company. We are going to top up next 100 crore in 40 company, next 100 crore in 20 company, next 100 crore in 10 company, and next 100 crore in 4 company. We call it as betting on the horses. Zip is a classical example. We invested when they were 20 crore rupee and we invested when now they are 2200 crore also. You keep betting on horses so that your equity participation remains across multiple rounds. When I say that from 100 we will invest in 40, that doesn't mean rest 60 have closed down. Yes, 10 or 15 or 20 may shut down. Another 20 may give only 2 or 3x return. Another 20 may give 10x return. We are talking of those 40 where we are so bullish that we want to invest again. So I repeat, rest 60 have not closed down, just that they are not giving that much multiply that we reinvest. But that's how the whole thesis works. Even if we invest 100 crore in this pocket, that's only 10 to 20% of whole portfolio. So that's the only risk we are taking. And if we look back last 4 years, that's exactly we have done at We Founder Circle, backing at very early stage. Because by the time a larger VC fund comes here, please understand we have already got a 10x return. यहाँ से यहाँ पर we already get 10x and then it multiplies. That's a whole success story. So a large investor invested in Zip at 1,000 crore. From a 20 to 1,000 crore, we already have our 50x multiply, and then it is only getting multiplied. That's a whole scheme where a VC fund tries to work. We typically, while we are sector agnostic, our focus areas are AI, agri-tech, fintech, health tech, AR/VR, clean tech, and so on and so forth. These are leading sector. That's where we want to invest. As I mentioned earlier, there are three set we always review on where to invest. 60% is founder. Is he the person who can drive this company? Is he the person who can really make it? Because as somebody asked, that it's very difficult to have any analytics at an early stage. Second is market. Is market enough? So we got a very beautiful product almost few months back. It was a hearing aid solution, very technology driven, very unlike what you get in the market. But hearing aid market in India is only 500 crore. So is the market enough that we wish to invest in? Should we invest at 50 crore and only, or even 5 crore and only look at 100x multiplier? And 100x only then when he caters to 100% market, which will never happen. So yes, you look, is the market big enough? And then the product market fitment, as I took the example, will the founder be able to drive the market for that much of market share? Those are the three factors which we typically delve into. Once we decide to invest, we go beyond investment. There are a lot of mentorship that we do. There are a lot of connections that we create. There are a lot of strategic investor and founder that we bring for next round, and a lot of credit support like you get for AWS, you get for multiple other tools that those founders ask. That's what we provide year on year. Our theme says funding, business, and networking. These are the three pillars of our investment across we founder circle and across Avinya. That's what we enable founders once we decide to invest. And a lot of validation we do from our VC network, from investors, from IC board before we get into those investments. So yes, we're very deep dive process, and this is the success recipe. In fact, just to tell a story, for Avinya, we had our first IC board on 2nd of June. We started with 483 companies. IC come to only 4 companies, which is only 1%. As you can see the funnel here also, our target is only 10 from 1,000. The IC rejected 3 companies out of those 4. So we ended up investing only in 1 company out of 483 companies. That's how deep the curation process is. Because whole, I would say, hero of this story is the startup. Nothing to demean any investor, but the real hero is the startup. Can we figure that out? There are multiple sources where we get startup. We do a lot of scout program. We do a lot of events. We get a lot of organic deals on invest on WFC. We do a lot of references on our LinkedIn from our partners. We do a lot of events. We close to 25 to 30 startup event across the year. So yes, somebody else, what is IC board? IC is investment committee. Investment committee is the last team which actually stamps the authority that everything is in place. Yes, we have signed that, and it's a very structured investment committee that to create for any of the investment. In Avinya, 3 of us between, or in fact, all 5 of our WFC co-founders are there. We have 3 other people, one from Chennai, one from Jaipur, one from Goa, who are the permanent IC members, and we have all those details in a separate deck. But just that's the last committee which stamps an authority that this startup should be invested upon. After initial due diligence, so there are 4 levels of due diligence happen. One is score-based, one is legal due diligence, the third is financial due diligence, fourth is physical due diligence by traveling and understanding the business, fifth is the IC board, and then the investment actually happens. Nilesh, you're raising hand. Sorry, I can only take Q&A right now, or I'll open the forum after the presentation. We have 2 3 more slides. So apologies, but just hold on for that time. Yeah, these are key terms of any VC fund. This is about Avinya. A few funds may have a bit different, but that's very broadly because these are SEBI regulated funds. Both angel investment and VC investment are highly SEBI regulated. So as mentioned, we are Cat 1 fund. The term is 7 year plus one, and plus one is allowed only in extreme cases like COVID. Otherwise, the fixed duration is 7 years. When we say commitment period is 36 months, as shown at the bottom, we took our first drawdown in March 24 for 20%, March 25 30%, March 26 20%, March 27 30%. So four tranches across 3 years, 36 months. That's what the commitment. Fund is 500 crore as we discussed. Uh, I also mentioned earlier that we are a very operator type VC. So between co-founders, 5% of the fund amount will be invested by us. So the out of 500 crore, 25 crore will be coming out of myself and Gaurav and Neeraj, all of the team that we are here. Minimum investment is 1 crore. Fees is 220 model, 2% transaction fee and 20% carry. Interesting thing is in VC fund is this hurdle rate. So just to help you explain this fees and the hurdle rate, unlike a angel investment where you do a one-time transaction fee, which is 2 to 3%. So when you invest 100 rupee, you also pay additional 2 or 3 rupees. So you pay 103 rupees. In VC fund, the management fee is a part of 100 rupee itself. So technically, the fund takes 100 rupees, let's say as an example. 2% fees every year means it actually keeps 14% in 7 years with itself. It invests 86 rupees. But first, it gives you a return of 100 rupees. Then, when you compare 12% hurdle rate, which is 121 rupees in 7 years, so 100 goes to 221. Only when the fund takes your returns to 222nd rupee, that the fund carries this carry, the fund earns this carry. So carry returns start only after the hurdle rate is achieved. That means while we are committing 24%, in a worst case, let's say we end up giving 11.9%, we as a fund manager earn zero carry returns. So that's our commitment and we give that in writing. That's how we live. Just to clarify, after 222 rupees, that 20% fees applies on all of the amount. It's not beyond 221, just to clarify. Just to also keep people keep asking on tax rates, so the tax rates have been revised. There are two type of tax slabs. Short-term capital gain applies to mostly to angel investment in VC fund. Generally, there's nothing called short-term gain. So this goes by your standard tax slab. For long-term capital gains, earlier it was 20% with indexation. Now with the change rule, it is 12.5% flat, which is same for stocks, same for mutual fund, and same for VC funds. So all these instruments are in same category now with respect to long-term gains. We are five co-founders. Gaurav is also the fund manager for this fund. He'll be leading. As I mentioned, five of us will be investing 5% of the total capital. Come from a very varied background. Gaurav is a CA. Neeraj has been creating communities. I come from India Mart. Dave is a techie working in Infosys and so on. And Bhavna was in China doing with ByteDance Venture into incubation. So very, very different background that we all come with. Uh, these are a few success story of our own as an individual. I'm being clear. These are not WFC. These are not Avinya. Avinya so has hardly started investing now. Uh, Bharat Pay, we as a personal investor got 80x multiplier. Zip, as I mentioned, we started 20 crore. It is now at 2600 crore. We are at 43x multiplier. Another company not mentioned here was sorry, that was a hair care company which got sold out to Marico. So there was a multiplier. So there can be exits when VC comes in, larger VC. There can be exit in merger acquisition. The whole story we are trying to present here is that we have that knack from 7, 8 years to find early stage success possibilities. And that's what we keep doing all this year for our own investment. Then started WFC and now for VC fund. Yeah, that's it from my side. I'll be happy to take Q&A now. And you are also allowed to raise your hand if I'm not able to answer, and we will be happy to take your questions as well. So I'm just going to Q&A, take up the question and possibly uh, try to answer the questions. Yeah, so one of the question, I'm not naming the investor, or I'm naming the investor just to align. So Tirupati Bhaiya asked, at what stage of startup we need to consider for investing? So Tirupati, again, it's a very, very personal discretion. I invest in very early stage. My thesis goes possibly startup not beyond 100 crore valuation. That's my sweet spot. Again, what I do is not what everybody's supposed to do. I know almost 50 investors who invest only at Series A. Series A typically comes when the valuation reaches upward of, let's say, 200 to 500 crore. I know people who invest only at pre-IPO level. So yes, there's no stage defined. Purely your thesis, which industry you want to invest, how much money you want to invest, and which stage of startup you want to invest. Other question somebody asked anonymously, what is the typical return period? Return period for any startup investment, minimum is 3 years. Please expect on an average 5 years for any returns. Please be very, very sure, at least in angel investment, you are not going to get returns in more than 20% startups. But those 20% startup is what going to make your 400 out of 100 rupees or 24% CAGR. So yes, typical lock-in period should be 50, 60 months. Please assume that. I give you three tips in general for startup investment. Invest when you have access. When I say access, I mean both ways. That one, it is locked, and second, it may go bust. So don't have any other investment planned on this money. Second tip is diversify. As I keep mentioning, invest across multiple startup and multiple amount. And third, this investment is not a liquid investment. Even if it becomes 10x, you may or may not get a liquidity. It will take its own time. So please, 50 to 60 months is a good time to take that. Ashish Kothari asked, angel investment is further bifurcated into syndicated and direct cap. Yes, Ashish, you are right. And as I mentioned, most of the startup take minimum of 20 to 50 lakh to be on direct cap table. And you can syndicate as small as 2 or 3 lakh rupees. So most of the startup, at least what WFC offer, we offer both the options. But very, very few investors prefer direct cap simply because of a higher amount. And why the amount is higher? Simply because SEBI has a regulation that a startup cannot have more than 200 investors on the cap table. As soon as it hits 200, the company needs to get public limited. It needs to get into IPO, which every startup cannot do. So yes, syndicated and direct cap within angel investment. Minimum amount varies in both. Other question, how many VC funds are there in India? Where can we get a list of these VC funds, which gives us a full idea on various type of VC fund? Mukund, India must have now like close to 200 fund, I must say, or maybe even higher. Again, VC funds have very, very different thesis. We invest in early stage India focus. I know funds which invest only in Series A. I know funds which invest in pre-IPO. I know funds which are climate tech or which are fintech or which are prop tech. You can Google the list. It will be available. A few handful we can provide if you require that. Also, since somebody asked uh, with respect to my contact, I'm just putting it here before I forget. I'm just putting that in the chat. My number is 9711003848. That's one of the questions somebody asked. Happy to get connected directly. Anybody wants, so not an issue. Just a request, if I don't pick up call for some reason, just WhatsApp me and I'll be happy to call back. Not a worry. Some anonymous question says, can you share more information on the increasing limitation that SEBI will be introducing for small investors, like 2, 3 lakh currently available? So no, I don't see 2, 3 lakh getting reduced. The way I could see, SEBI might like to increase the 25 lakh in 5-year limitation to 50 lakh. That's my hunch feeling. I'm nobody to comment on anything which has not happened. But being in this industry, that's the increased limitation I foresee. They may increase the minimum 25 lakh limitation of investment in 5 years to minimum 50 lakh. That's my hunch feeling in next 12 months. Just to put in perspective, when PMS started in equity, it was allowed as small as 10 lakh. They increased it to 20 lakh, 25 lakh, and now it is 50 lakh. VC fund, you would have invested as small as 25 lakh, it increased to 50 lakh, and now it is 1 crore. So yes, higher the income is increasing for people, higher the countrywide growth is happening, higher the limitation is SEBI is putting up. And the whole reason of doing that, simply SEBI has one reason. It doesn't want retail investors to come into this asset class. It wants uh, very limited class of people who have done due diligence to come, and that's why they increase this limit. There's no other reason SEBI does that. Bhumik again asked how to start as an angel investor, how to find companies and talk with them, everything. So, Bhumik, at least in WFC, we present to 3 to 4 opportunities every month. The best way is to simply register on Invest. You will start getting the communication on your mail and WhatsApp. We do a pitch day where a founder comes, he himself presenting his company, so you can know everything about that. We present his pitch deck to you. We in fact share the pitch deck. Share the video recording, and then all those people who are interested, we even do a one-to-one Q&A. So yes, you can get all the details directly from founder within our ecosystem uh, to get all those details before you actually invest as an angel investor. The Sanjeev Kundu asked how to identify a new startup. Again, you guys don't need to identify the platform offers. The We Founder Circle presents almost 50 startups a year, 50 to 75. You can just and most of the platform does. It's not just about us. So yes, you the best thing you can do is to pick and choose out of those and invest. Uh, I hope I'm not rushing out any questions which are possibly still not understood. You can raise hand because I'm naming the investor and I'll be happy to talk one on one if that works. The moderators can open the mic for you and you can talk there. The next question somebody asked, please explain the 25 lakh threshold limit. Yeah, Ashish. So once you start angel investing, there is a contribution agreement that you need to sign with the fund, which says that you need to invest minimum 25 lakh across multiple startups combined in a 5 year duration. You can invest maybe 2 lakh per startup and you invest in 13 investments. You can invest 5 lakh and each in 5 investment. Whatever combination you are comfortable, that's allowed by SEBI. But minimum 25 lakh overall amount via a single syndicate oblique fund in 5 years. That's the SEBI regulation. One of the other question that this is related to VC fund. Somebody asks, does that mean by the end of 7 years, all portfolio must be exited? Legally, technically, yes. But when we say exited, there are 4 ways that a fund or an angel investor exits. The first way is called secondary sale, where our investment is bought over by another investor at a certain premium. And that's how you get exit, either as an angel investor or even as a VC fund. Second way to exit is called a forced exit, where large VC comes in, it says, I don't want retail investor, I want all the money out, which typically happened for us in 1 or 2 deals. In fact, BharatPe was the classical deal where there was a forced exit. That 80x was a forced exit for us. Somebody comes in. Third case is merger acquisition. I was taking example of a men's grooming company that was Beardo. Beardo got acquired by Marico just last month. Bank Sathi got acquired by Incred. That's where you get exit. And fourth is called IPO. Generally, IPO doesn't happen for early stage investment because average life cycle of IPO in India is 16 years and the fund average is 7 years. So yes, it doesn't happen. So one of the other ways where the portfolio is exited is the VC fund brings fund two. Fund two buys out fund one and gives exit to all the investor of fund one. That's how the exit happens. Lot of time in India. In fact, that's the only way in India exits have happened in last 10 years. To be fair, there's no IPO based exit mostly happening in India as of now because VC funds are very new. Which investment is better as per your experience? Buy an acre, create small plot, multiply money to 3 to 4x or angel investing. So Akshay Gadia asked this. So Akshay, my answer is very clear: diversification. I don't put all my eggs in single basket. So if you're uh, better investment is property, I would still say invest 65% money in property. So I'm not here to stop anybody from investing. My only answer, including me as an investor, and I can bet I have a lot of money to invest. I don't put more than 65% eggs in a single basket. Sorry, it may look bad, but you never know. When a landslide happens in Himachal and all the property gets washed out, you never know when a Palestine, Israel, or a Russia, Ukraine happens. And if you are only in property, something can go wrong. Similarly to all the asset class for that matter. The only safe asset class is gold, though it gives one of the lowest return, only 8 to 10%. So my answer, there's nothing good or bad. The best asset that you believe you want to invest, cap it to 65%. That's the only answer I can give. I do that for in mutual fund and PMS. You may do that in property for that matter. Oh, there are already 20 questions more. Sorry, I just keep blabbing on that. Rinko, Supriya, you can keep removing the questions which I have been answering, so it helps me to just have more sanity. Please explain WFC fees, capital gain aspects for both angel and VC. Okay. I'll not go to WFC. I'll just give the fees aspect. In both the in angel investment, you pay two type of fees. One is called transaction fee, which is a one-time fee, which is invested right at the time of investment. So if you are paying 100 rupee and WFC takes 3% transaction fee, you actually pay 103 rupees. Second fees that you pay in angel investment. Uh, the second fees that you pay is called carry. Carry is carried gains that you get at the time of exit. Typically, we differ that between deal to deal between 14 to 20%. So let's say you invest to 5 lakh rupees in a deal and it ends up being 20 lakh. So you get 15 lakh. If there was a 20% carry, WFC keeps 3 lakh and you get 12 lakh. That's how the carry is calculated. So, yes, as an angel investor, WFC takes 3% transaction fee and between 14 to 20% carry. And 3% transaction fee is above 100 rupees that you invest. In VC fund, there are again two fees. One is called annual management fees. It gets deducted every year. It is 2%. So, but it gets deducted from your 100 rupees and part and parcel of your investment. All the returns. So let's say fund deducts 2% every year for 7 years. Uh, it actually invests 86 rupees, but you get ROI on 100 rupees. You don't get ROI on 86, so you don't worry on the fees in a VC fund. Apart from that, VC fund charges 20% carry. Same formula, if 100 rupees become 400, 300 gain, 60 rupees keeps the VC fund keeps, and 240 rupees you get. I hope that makes sense. What about the business diligence? Which is different from financial analytics? Yes, Gopal. Obviously, business diligence happens. The only difference when I say very early stage company, lot of diligence is on founder and the idea because you don't have numbers. As the vintage of startup increase, as you invest in further round, there are a lot of analytics happen. There are a lot of unit economics, profitability, and a lot of KPI. All that happens by default. There's no second opinion. Yes. Samit asked if there are so many checks, why success in startup is low. Uh, Success rate is low because these are high risk and high reward. Startups are trying to do everything which possibly nobody has done in the last 100, 200 years. So yes, it's always a high risk. My answer, sorry, it looks conventional. अगर लो रिस्क चाहिए तो परचून की दुकान खोलो 10% वहां भी मिलता है. That's how I answer most of the time. And I was in India Mart. I've run that IPO listed company. Even there we used to answer that. अगर 10% growth है तो परचून की दुकान खोलो. Then you don't work in a startup or a tech driven company. So yes, high failure rate because there is a high risk. They are working on ideas. Ideas may not find a product market fit. Ideas may not find investors. Idea may not find a real taker in the market. A lot of risk associated. Generally, to be fair, overall 99% startup fail. Just that when you invest via a platform, the failure rate drops to close to 80%. But yes, anybody says less than that is simply lying. Not more than 20% success rate is visible as of now in startup ecosystem worldwide. Uh, does all five committee members have to give go ahead to decide investment? So there are not five committee members. Just to clarify, for WFC deal, we have any of the three WFC co-founders, three fixed IC member, and three variable IC member industry specific. Out of these 6 or 9 people, at least 66% people have to say yes, that's one of the criteria. And anybody highlights any red flag which we somehow missed, then there's a veto, we don't invest. Please understand more than the investor himself. There are a lot of things at stake for We Founder Circle as a community and as a company and VC fund. We don't earn if you don't earn. So we don't have any fun in giving a startup where we find even a single iota of risk. I can name there's a startup coup, if everybody heard that's a social platform which shut down last month, by the way. We raised 6 crore rupees for that, and we, for some reason, and in our due diligence, it failed. We returned 6 crore rupee money back to investors. I don't want to claim for fame since it has shut down, just naming as a reference. And even 2 months back, we raised for one of the startup, we raised almost 3 crore rupees. We got some red flag on the founder. Even after raising the money, we returned to investors. So please understand and rest be assured, any single iota of doubt by any investor, by any of the IC member, we don't invest. Our stake and our returns is based on your success, not on us. So yes, everything on that. Somebody is asking, has Avinya already started investment? Yes. We have fourth IC board on 2nd of September. We already have three IC meeting. We already have gone through in total almost 15 startup, and we have now shared term sheet with three. So yes, we have started investing now. How will the strategy change for VC fund if it is 250 crore instead of 500 crore? So the strategy will not change. Just that 100 crore into five buckets will drop to 50 crore in five buckets. By the way, where we stand right now, we have done our first closure in March 24. We already have done 200 crores. The final closure will be March 25. And where we stand between 350 to 400 is very clearly visible right now. Yes, beyond 400 maybe still a question mark, and we are committed to that. But yes, any number that happens, we'll simply divide that into five pockets in principle. Is tax implication same for NRI and resident? No, for resident, I've shown the tax implication. For NRI, it is 10% capital gain withholding tax. If you're paying any capital gain in your country and there is a dual taxation treaty, then you can claim this 10% deduction there. So it's a flat 10% capital gain withholding tax for NRIs. When I say NRI, it simply means somebody who is investing in dollar terms via our global fund. If you're simply NRI, but you are doing KYC from Aadhaar and PAN, you are not considered NRI with respect to asset investment. You remain to be Indian by that definition. Please be very clear on that. If you are using Indian passport, you are Indian. You may be staying anywhere. If you are using US non-Indian passport, you are NRI. Just to clarify the definition. Gopal Krishnan asks, how many startup out of 150 are not doing well? How many write off? So, Gopal, we have written off five till date. They have literally shut down. I can name one. Quizy, we shut down as soon as 28% tax was levied. It shut down overnight. Bellora Paris is one of the companies shut down. So, there are five startups which are shut down. There are another 15 which are not doing well. When we say not doing well, yes, we keep committed to that. But yes, they are in our red zone. We have red, amber, and green zone. They are there in red zone. So 20 in all, which is like 10-12%. And that's a very, very healthy number if we look at our 3.5 year horizon. But that's where we stand. Uh, I would say, uh, Rinku, if you can just put a poll in between to take interest from people if they are interested and we can connect to them, you can put up the poll with respect to interest in investment while I keep taking the questions. So, yeah, over to you there. We talk about 10x return, 20x return, then why do individual get only 24 to 40% return out of that? So, Bhumik, when we say 10x or 20x, that's for a single startup. That's not for every single startup that you invest via angel investment or via VC fund. You always have to average it out across your investments. So I again repeat, when you invest in 20 startup as an angel investor, let's say, You get 50x into, you get 20x into, you get 10x into, you get 2x into, and you don't get anything in this 12 or 13 or 14. When you average it out, it becomes 4x overall, which is 24% CAGR. That's the whole mathematics. So please never get happy about a single 50x or never get worried about a single startup closing. End of the day, you have to find a median across 5 to 7 years if you really want to take as an asset class. If you really compare even the mutual fund for that matter, you only get to know that I got 11% return. Mutual fund invest at a time 25 to 30 companies or minimum 20 companies. Even there, they get 20 to 30% CAGR in some company and 5% in some. The return you get is average. So please, and I again mentioned, we got Gaurav Singhvi, who is one of our co-founder and the fund manager. He has 125 investments. He already got 17 exits, which he have encashed. He got 20 exits, which he has not encashed. Out of those 17 exits, one of them is BharatPe 80x, but still his overall return till date is 4.5x. 4.5x is on overall investments. So yes, there, please don't get bogged down by 10x, 20x. Please mean it to all your investment on a fair practice. Uh, Amit Kotak, Amit bhai, glad you are here. Do we have authority to accept or reject exit when offered? So Amit bhai, that happens case to case. Legally, yes, you can accept or reject. It happens when you only get a pie of exit. So for example, overall investors have invested 1 crore and it becomes 10x 10 crore. Let's take an example. And we get an opportunity of 2 crore exit. So we present that exit to all the investors, uh, uh, which is only 20% of their investments. Some says I want 100% exit, some say I want 50%, some say 0%. So in that cases, this is possible that you can select or reject, or you can even take partial exit. In case a larger VC comes, and I use the term forced exit. In case of forced exit, which happened to us in Bharat Pay, or in terms of merger acquisition, you don't have a choice. Then you are forced to exit with whatever returns are available. Yeah. In angel investment, is it possible to get a beta of startup? Prasenjit, you're asking this question. Yes, it is possible wherever it is available. All the data that we share is as shared by startup. EBITDA generally is not possible before 2 to 3 years of startup being started. If you are assuming in first 6 to 12 months, trust me, there are a lot of startups which are even pre-revenue startups. उनका कोई revenue ही नहीं है, EBITDA तो बहुत दूर की बात है. But yes, for 80% of our startup in angel investment and 100% startup in VC, we provide a monthly or quarterly report, and whatever metrics we have, we do share. Rinku, we have put the first poll. I think we need to put the second poll. There are a lot of people who might like to skip out, so please put that right away. Somebody asked, is there a nomination facility just to take care of eventuality? Pradeep, there's a nomination facility. In fact, most of the time it is a compulsory nomination that SEBI asks. So yes, both in VC fund and in angel fund, there's a nomination facility. You can nominate more than one person. You can split the nomination that if there are 2%, somebody can get 80 or 20. All that is possible in a legal manner, in a written formal manner. Yes. What is the minimum revenue that startup should have for Avinya to invest? So there's no minimum revenue. As a thesis, we generally don't invest in a pre-revenue company, but there's no cap that we have put with respect to revenue as a number. Somebody said, please provide, it will be great. Mukund Dalmia, I'm not too sure what you're asking. If you're asking for my number, I have provided already on the chat, 9711003848. My email ID is vikas@wefoundercircle.com. I can just put that as well on the chat for everybody. Happy to connect with everybody as required. Okay. How to take, Ishan Gupta is asking how to take exit during startup investment if one invests as an angel investor. So, Ishan, exit generally, you cannot ask for exit. There are times when the platform or the founder will offer exit. As I mentioned, please don't expect that before 3 years. That's the time when generally exit comes. Till date, we have offered five exit. We are planning to offer almost 10 to 12 exit. That's one of the commitment we want to do as a platform. But yes, you can get only as and when come in angel investment. In VC fund, you can't even ask for exit. It's the prerogative of fund manager. It's as simple as a mutual fund where a fund manager decides when you get exit, and 7 years is anyways closure period. At the end of 7 years, you definitely get the exit. So yeah, that's happened. It happened that way. Kumar Saurabh asked, how do I attend the future pitches? So Kumar Saurabh will simply add you into our platform. You'll start getting the intimations of the pitches on WhatsApp and mail. Supriyo, you can even add his name. We have our next pitch coming on 31st of August. So you'll keep getting an update. You'll simply do a registration and you attend. It is free of cost. There's no charge. There's no compulsion to invest also. Only once you're very sure that you want to invest after hearing the pitch, after seeing the deck, only then you can invest. So everything is free of cost till that time you invest and we take a transaction fee. That's the only fee we earn. Vivek Duggal is asking, does WFC invest in every startup that is presented? Vivek, WFC does not invest in any startup at all. WFC is just a marketplace which present any startup where investment happen. That's by founders in individuality. WFC as a company does not invest anywhere. It is a marketplace to make investors and startups after due diligence. Yeah. Yeah, the next question is already done. Amit Bhai Patek Authority. What are the discounts at secondary sale currently, or it varies startup to startup? Vivek, generally the discount is 20 to 40%. It varies startup to startup. It varies on demand supply. It varies on what is the need of a particular इन्वेस्टर हिमसेल्फ नहीं मुझे तो पैसे चाहिए भाई जितने भी मिलते हैं दे दो सो यस बट जनरल रेट्स आर 20 to 40% डिस्काउंट इफ somebody wants to shell out on the latest valuation. Atul Parik, hi Atul. I guess you are the same guy we met in Dubai. Warm hi again. What is the legal protection for for angel investors? So Atul, when we say legal protection, all the investments are highly regulated by SEBI rules. But when you say legal protection, there's no protection on the startup getting busted. So there was no legal protection when 197 or Paytm dropped from a 2,200 rupees to 800 rupees. There was no legal protection. There was no protection when even in listed company when LIC dropped from a 90p to a 50p. So the protection is only that your money, only white money is accepted. There's no cash. You get a proper quarterly report. Now every single investment is visible in your demat account. So all that infrastructure is very robust in India thanks to SEBI. We are a huge fan of SEBI and regulation in India. But yes, if startup does well, or even a listed company doesn't well, SEBI doesn't have any role to perform. That's purely on discretion of investor. If I have 2 to 5 lakhs, so what are the steps to invest in startup? Mohsin, sorry, I'll tweak the answer. It is not about 2 to 5 lakh. It is about how much money you are planning in 4 to 5 years. As I mentioned, unless you are looking to invest in 15 to 20 startups, 2, 3, 4 lakh rupee per startup means between 50 to 80 lakh rupees. My answer, please don't invest. Don't invest with small PT amounts unless you have a large horizon, 3 to 5 year, with those structured investment every quarter. Please don't use this asset class as a gamble. Most likely you will lose, and that's definitely not the purpose of this call. Please be very vigilant. All of us have earned the money hard way. Unless it's a structured investment, don't invest. Yes, if it is only, yes, I want to invest 15 lakh this year, and right now I want to invest 2 to 5 years. Yes, we have our next pitch day coming on 31st August. You can attend that. We already have 4 or 5 deals live. Right, yes. Supriyo, you can note the name. Our investment manager can connect and help him with the current deals, and we can help out.
Sure.
Yeah, Kumar Swab, again, is there any app website? Is there any scheme to learn post-funding performance? So all this, Supriyo, please again, Park, we can help him one-to-one. We can walk through actually with the startup, actually with the website and app, and we can enable that. So Saurabh, you can simply log into invest.com, invest.com. You go to investment deal, all deals are available, all details are available, and the investment manager will also connect one-to-one to help out. There's question from Ishan who said, please send the invite for 31st. Supriyo, please again note. Please connect one to one to help out. Uh, Aditya has mentioned his number on chat. Supriyo, note you also want to be like to be the part of pictures, so let's register in and help out. Samit has asked, can we invest in cash? Sorry, no cash allowed. Neither in mutual fund, neither in startup, neither in VC fund. Absolutely no cash allowed. If there's any thought, please drop it only and only white money, only via direct transaction, either to the fund or to the startup. You don't even part money with WFC. The money directly goes either to startup or to the angel fund or VC fund. That's how stagnant, and that's why I say SEBI is highly regulated, very beautiful infrastructure, and that's what the legal protection is all about, which Atul Parikh was asking. Why do VC wants to force exit? Okay, somebody is asking why do VC wants force exit? So VC wants force exit for possibly one or two reasons. One, they when they take a large pie as high as 20-25% in a company, they don't want retail investors on the cap table. Let's say a VC is investing 10 crore rupee at a certain valuation. He generally says, यार 2-2 lakh रुपए वाले लोग यार just clear out the cap table. That's first reason. Number two, when a lot of such investments happen, uh, the number of investors on a startup is not allowed to go beyond 200. Anything which, as soon as it goes beyond 150, VCs, large VCs are not comfortable. And that's why they want to clean up all of the cap table. And these are possibly, not possibly, but these are generally two reasons for which somebody wants to, some large VC wants a forced exit. Oh, we still have 7, 8 questions. Thank you guys for pouring out your heart, and thank you guys for waiting all this while. I remain committed and invest time till the time any questions remain. Alok Nath is asking, will you send reminders of Tuesday deals? Yes, Alok, we send on -7 day, -2 day, -1 hour. So yes, it's a structured process. You'll get all the reminder on mail as well as WhatsApp. Uh, Generally, how many VC fund have delivered committed returns? Uh, this is an anonymous question, and my anonymous answer is there's nothing called committed. It's only that's we strive for. There's no single asset class worldwide who gives any commitment, neither property, neither gold, neither uh, equity, neither mutual fund. All of these are best practices. But yes, I know VCs fund who have given as high as 48% CAGR. I know VC fund who have given 20%, and I know VC fund who have got busted and given only 5%. So yes, and I similarly know the same in mutual fund, and I know similarly in equity. But yes, there are VC fund who have given from 5% to 48% within India and within last 7 years. How big is We Founder Circle team? IFC founders, etc. I don't know what IFC is. I'm assuming how big is We Founder Circle. So we have 46 employees overall spread across 5 locations. And when we say 46 employees, they cover all the companies which is We Founder Circle as a community, Invest as a technology, EvolveX as a accelerator, and Avinya as a VC fund. We cover all of that with those 46 employees, tip to tail, including founders. That's how big we are. Uh, Carry on charges are too much in some good deals, around 20% in future. Are you open to consider for less? Rajiv asked this. Rajiv, we present that deal on deal. There are deals as low as 14, as high as 20. But yes, whatever we present is what we take. There's no sort of bargain on carry in that sense. Uh, that's a carry. If you really want to do away with carry, the best way is direct cap table where you want to invest large ticket and the carry is as small as 5%. That's the best way to do that. So, yep. Rinku, you can skip these two questions. At the top, I'm moving to Ravi Bhaskaran. In both vehicles, is it possible to take a more active role than an investor if interested? Can this be facilitated during or post the investment? Ravi, yes. There are roles possible. There can be roles of mentor. There can be roles of helping in fundraise. There can be roles related to uh, networking, there can be roles related to business generation, and there can be roles even related to IC. All of that is possible. WFC has a target to engage at least 100 of our investors into this role beyond investment. Obviously, there are a lot of effects in there because founder has to be equally ready to take your services. Just that WFC cannot push anything on that. But yes, as a networker, as a fundraise beyond your personal investment, for business generation, for mentorship, for IC, there are a lot of roles possible, and we are happy to help. When does WFC have offline event? Akshay Gandhi asked. Akshay, we do almost 50 offline event on a yearly basis, but that's very geographical because offline is geography based. Last we did was in July. I personally traveled to 7 cities in UP. The next possible is on, we still have not communicated, but 6th of September, that is in Bhubaneswar. Possibly 25th and 26th September, that will be in Bhopal and Indore. So yes, we plan to do almost 50 offline events, investor event in a year. 40 of them will be in tier 2 and tier 3. I again request anybody who has not done poll, please do that. That will help out us to connect back to you on one-on-one basis. We'll be glad to help you. Somebody is asking any upcoming events in Bangalore. Alok, one of our co-founders sits there. We do small event. We'll just park your name. Supriyo, please note down for Alok. Anytime we have a small door meeting, we keep doing coffee table event. We'll be happy to invite you. Rajat asks, what method you apply for valuation judgment? Rajat, sorry, on this platform and in general, there's no answer. But yes, generally they are dependent on the market potential. They are dependent on the current revenue that they have. They are dependent on the last round of fundraise that founder has raised. So there are multiple factors. There's no zero one. There are a lot of FOMO valuation also happens currently that is happening in AI. Before that, that was happening in EV and so on and so forth. There's no strict formula that I can answer on this platform right now. Aditya Singhal is asking, dematerialization is mandatory for all private limited shares. Aditya, dematerialization as of now is compulsory for all investment happen via any angel fund or VC fund. As of now, it is not directly mandated on the startup to do that, but it is mandated on the funds to do that. For example, Invest Fund, all the investment that we have done since October 22, every single investment as of today is dematerialized for all the investors. So it is now a compulsory liability from April 24 for all investments that happen via angel platform, via any angel fund or via VC fund. It is not a direct liability on a startup where you are investing on a direct captive. Yeah. Again, somebody is asking for me to share my number. I'm again sharing on chat 9711003848. Alok, we are asking tomorrow anytime we can connect. I have to rush to some other meeting right now, so my apologies. But anytime tomorrow later, please, happy to help to connect anytime. Somebody is asking, is WFC no longer, sorry, if somebody wants to work with you, how to connect? If it is for employment, sorry, we are not hiring right now. It is for anything beyond that. Please, you have my number. Happy to connect and we can discuss synergy. So I hope I will be able to answer all the question that I have in front of me. Anybody still believe their question? Raise hand. We are still open. I know we kept that for 6 to 7:30, and Supriyo, that was I was saying. I don't know if that time will be sufficient. But anybody if has any question, we are happy to take that. You can raise hand and we can talk one to one item. Anush, thanks again. Yeah, good education, and that's the whole purpose. Masterclass is not here for sales. Masterclass is to ensure that people on the border get the right information. Even if we are able to transform 10% people into investors, even if beyond WFC, the way I see India has only 1 lakh investor in startup ecosystem, and this number, like it has jumped tenfold in mutual fund sahi hai, mutual fund sahi hai. Next 10 years startup sahi hai. The number is going to go 100x from here. Do you want to become early mover is the whole objective of these master classes. So if I have been able to help even a bit, my sincere Thanks that I've been able to justify this call. Yeah, so looks like there are no more question, at least not in Q&A bucket. Any raise of hand, happy to answer. I could not see right now. One raise of hand, Rinku, if you can enable that. That's from Sabu. If you can unmute him. Yeah, Sabu, you are unmuted.
Yeah,
You can ask the question right
yeah,
away.
good evening, sir. Just want to understand the valuation at which you can be made the forced exit. Who decides the valuation on this?
Sabu, I answered valuation is decided by the platform itself, like we found a circle. It is depending on multiple combination, like the last fundraise they have done, their revenue. If they are pre-revenue, then what is the market opportunity? Is there a future story? For example, we have a company which is into 3D printing. They don't have revenue, but still we have raised fund at 50 crores. So yes, there are opportunities come in different formats. There is no zero one answer that I can give you here right. Vipin, you have asked, you have joined a bit late, and can we share the PPT? Sorry, we cannot share, but if you want to discuss again, I'll happy to invest one-on-one an hour with you. That's perfectly okay. PPT is difficult to be shared. So here you can note for Vipin Gupta, and we can connect one-on-one as per his comfort.
Sure.
Somebody is again asking what skills are required for career employment in WFC or Vinaya for future. I think the only skill we required is you need to be go-getter. We are ourselves a startup. We keep pivoting every 6 months. We learn a lot from ecosystem. So yes, that's the only criteria. Nothing beyond that. We are dot on time. There are no raised hand. There are no questions. I'll just wait for another 30 seconds. By the time I really, really want to thank everybody for being a captive audience. We still have 37 participants. We started with 75. So thank you guys. Thank you so much for being patient listener. That too on a bloody Saturday evening, not the best of time. And that's why I was really abusing my investment managers, including for my Saturday evening. So we will keep doing this every month. We'll keep doing in different slots just to enable more and people to join. That's what we'll try. So thank you so much. Have a beautiful evening. You have my number, email. Happy to connect as required. Take care and all the very best. Bye bye.
Supriya, you will have to end the meeting.
Rinku, you're saying something or not audible?
Yeah. Supriya will have to end the meeting.
Yeah, I'm just leaving the event now. You can close the webinar. Thank you.